but let's navigate our conversation more towards fundamental side now. Ajay Vora, Head Equities Nuvama Asset Management, joins us to take the discussion forward. Good morning there, Ajay. Your assessment on the markets right now, stocks that have been doing well in terms of the entire mid-cap space, something that fascinates you and can be a pocket of value at this point of time for the investors out there.
Hi, good morning. So broadly, I think that market should ideally consolidate in this range, considering the, very sharp rally which we have seen over last 4 months. And in terms of both valuation and the inflows, what we have seen. So if you look at valuation, we are now trading at closer to 20 times FY25, which broadly in the near term looks like, a pretty much fair multiple. So maybe, a couple of percentage points here and there. But broadly, in terms of positioning also, if you see, we have seen almost $18-19 billion of inflow from the FI side over a period of almost 4 months. So there is a lot of bunching up which has happened considering the outflow which we have seen from them over last 2 years. So both the factors put together, the FI inflow has also slowed down considering the global setup now, is moving a little bit more towards, risk averse. Considering that people are looking at some sort of slowdown in the second half in US with a lag effect because of the sharp rate hikes. So all in all, I think that we should ideally consolidate in this range of somewhere around 19,000 and 20,000. And then once we get into the festive season and the numbers again start looking up from the consumption side, we can start the next leg. But till then, I think we are broadly in this range of 19 to 20,000.
Your view overall on the mid-cap space, AC sales have not done well, but something on the other hand, like gold jewelry companies have done extremely well. Thanga has done really well, Thanga Mile Jewelers. In the last 1 month, there is a 70% uptick seen on that stock as compared to minuscule gains coming in by the other, counterparts. But today, even Titan will be reporting in their numbers. How are you looking at that space and what's your expectation out of the giant Titan?
So mid-cap has always been very much stock specific, and therefore, it will be very difficult to take a generic call on where the mid-cap as a basket is, likely to move forward. There has been n number of companies during this result season and, last couple of quarters as well, which has reported fantastic numbers. And the theme, I think, which is going on right now is broadly, the companies who are extremely well positioned on the export side, as well as companies who are having a very differentiated franchise on the consumption side. So I agree that, on the very basic consumer durable categories, something like Voltas have not done well. But if you look at, something like a Capex story, which is a Polycab, where the cables and wires have done exceedingly well. So it is very much a stock specific kind of a theme right now, which is going on. I strongly feel that, from here on as well, there are n number of stories on the mid cap side, be it the whole export opportunity or the domestic consumption. I think these two themes are likely to do exceedingly well over next 2 years or so.
Any specific theme that you're looking at from the AMC level? Sure, you've given a broad flavor of those themes, but any specific themes that you think can be attractive to look at and is not caught up with the momentum thus far and probably could drive the rally in the second bit, if at all there is one, for the mid-cap index?
Yeah, so actually, there are three themes where we are extremely positive about. One is the whole premiumization trend which is going on in this country in the consumption segment. Whether be it on the apparel side, ethnic wear, the shoes category, the travel as a category. So all these things put together across these, the sectors, we are looking at a fairly sharp premiumization taking place because, now people are willing to spend more and more to upgrade their lifestyle. So that is one bucket where we are very positive. Second, as I just mentioned about the whole global opportunity, so there are n number of smaller sectors which are now getting a lot of traction on the export side, either because of de-risking of the supply chain or for whatever reasons. There are quite a few companies who are getting a lot of orders and in traction on the global side. So they are also likely to do pretty well from year on. And the last theme is the whole, the infrastructure transformation which is going on in this country. And therefore, the whole space of cap goods, engineering and equipment, construction equipment manufacturers, we all have seen that over last 10 years, nothing great has happened with all these names. But we are seeing a lot of traction in these businesses because of the heavy order inflow, both from the government side as well as from the private side. So, these are broad three themes where we are looking for opportunities, and we feel that, the compounding can be far higher over next 2 to 3 years.
So capital goods versus consumer themes, which are the one where you see more traction. In consumer, you've probably hinted at Manyavar Bata and Ease My Trip, if I'm not wrong. But between the two, what do you like?
No, so honestly, in India, the consumer stocks have been always very expensive considering the growth opportunity. But my sense is that, the capex visibility is also very strong. So I would say that, the whole capex related stories are looking far more attractive than the consumption right now.
All right, let's talk about what do you make out of OMCs like, BPCL has reported in numbers, IOC has reported in numbers, HPCL will be a giant which will be reporting in numbers today. What's your expectation from within the space? How are the trends stacking up? How are the valuations playing out? And what do you make out of the capital ratio right now for these companies?
So if you look at the results which are announced so far from BPCL and IOC, clearly there has been very strong upgrade in both these companies. And, to the extent that whatever Street was expecting them to deliver on an annual basis, in a way, they have delivered just in a matter of quarter. So the upgrade has been pretty significant, but the clear reason has been that, there has been a lot of over recovery from all these companies. So crude prices were favorable, and they have not changed the pump prices to that extent, and therefore the over recovery has helped them deliver fantastic numbers. Market is taking a view that this will get adjusted as we move forward over next 3 quarters, and we have state elections as well, and therefore market has taken a view that this can't be extrapolated, and to that extent markets have not given a thumbs up to these numbers. But I think the broad story is also, this whole green hydrogen story for this whole segment, which I feel that, if government is really trying to focus and get these players integrated into that whole green energy, segment, then honestly, it can be a really big story. And we have seen, how things change in public sector companies, provided, if there is a little bit of more focus, like what happened with defense sector or railway sector. If the focus is there on OMCs where they are asked to migrate into the green hydrogen segment, then my sense is that the earnings volatility will move away, and also valuation can re-rate. So we need to see whether that really that theme can actually play out for the OMCs. If not, then still I think that the downside is pretty limited because most of the stocks are trading at closer to 1.2 times price to book, or maybe 1 time price to book, which clearly has been the bottom for the whole sector. So I think the downside is limited. We need to see the triggers for the upside.
In that case, BPCL has already announced in the capital raising plans. Do you think HPCL and IOCL, they've not intended to raise the equity, but may follow suit if the plan is to secure the government grant and to be fair to minority shareholders?
Yeah, so it is possible because the debt levels are high compared to the earnings volatility. So there can be a fundraising. We can expect a fundraising over there. But as I said, that we also need to monitor where the capex is going into. So if it is into the newer areas like the green hydrogen or something, then markets may take it very positively.
All right, the last question that I have is for the entire pharma basket. A little bit of you've seen some amount of traction building in, especially after the Cipla's number. The guidance has been revised, and there is a bit of sense of optimism around that space. And of course, it's been under-owned by the entire FII community. If you talk about the valuations also, seems to be a little favorably priced. What's your perspective on that one?
No, so actually, if you look at the whole pharma space as well, it has rallied in a fantastic way over last, I would say, 4 to 5 months. And clearly, 4 5 months back, the whole space was available at a very reasonable valuations. Considering the growth, at least in the domestic market, the most of the stocks were pretty much undervalued. So we have seen a very fairly sharp rally in this space as well. And to some extent, the valuations have meaning reverted back to the mean. Clearly, the results have been pretty good for most of the pharma companies, and the commentary also has been very encouraging. It seems that the whole pricing erosion, which was going on in US for almost, I would say, 7-8 years, looks like it is likely to bottom out over here. And therefore, market has taken a view that if that bottoms out and if the India business also continues to grow at a fairly, 12-15%, then the valuations were pretty cheap. So even from here on, I think the growth visibility is pretty strong for few players, and therefore, we continue to maintain a positive view on the overall pharma space.
Right, that's the word coming in. Thank you so much, Ajay, for joining us and taking the time this morning. It was indeed a pleasure chatting with you.
Thanks a lot.
Right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Money Control app.